Felix here, and good morning to you. Welcome to this pre-market live stream. My goal for today is to make you the best informed investor out there. When I used to sit on the trading floor of an investment bank, what did we do every morning? We got briefed by somebody wiser, older, who got up an hour earlier and explained to us what was about to happen and therefore made us fit to go out there and make the bank money. That's exactly my intention here today. So we're going to go through the following. Make you the best informed investor out there today. We're going to explain the Wall Street FUD because I believe that is what this is. I believe Wall Street is trying to squeeze you out of your investments once again. And I'm going to show you instead which stocks are actually still cheap today and have you understand what matters for your portfolio, which is really what matters to you. I would imagine we're going to also go through all your favorite stocks, and I'm going to do my utmost to answer all your questions, except when someone's being an idiot, which is what the one guy did who I just blocked from the channel because I was feeling sort of powerful this morning. Like a little Napoleon. He's got a little bit of power. He's got a block button. He's not afraid to use it. All right, so this is what Goldman Sachs put out this morning, and they are trying to scare you and probably some of their fund clients out of some money. So let me explain. They're basically pointing to this chart. What the heck does this chart show? This chart shows that the orange line there is 2024, the stock market, basically, the S&P. And it's gone up pretty much as it ever has in the history of the stock market since 1928. Because the blue line up here is where we've, the sort of maximum where we've been there. So we're pretty close to that. So what does that say? Some people could say, well, if you have that strong a start to a year or that strong a year, the next year must be a disaster. Well, that, of course, my friends, is not true in the slightest. And then Goldman Sachs comes out with this hideous chart where they are trying to tell you what. There is a blue line on here, and it's basically the PE ratio, price over earnings. So what does that mean? Well, it's basically the stock price divided by profit. Earnings is a fancy word for profit. And you would think, well, if that ratio is really high, bad things are about to happen. But again, it isn't true in the slightest because the market does not care about profit. The market cares about next year's profit. The market is forward-looking, and even the highly paid goons at Goldman Sachs know this. So why they would put out this chart? Well, I can only think they're trying to scare some people out of some money. And here is also something that Goldman Sachs put out. Not today, no, because that would have gone against their narrative today. This is something they put out a few weeks ago, and this is actually correct for once. What does this show you? This shows you that here. What is here? Here is the first Fed cut. And a lot of what Goldman Sachs is saying there, you know, the bankers with the big heart who are trying to make you poor, although given that you guys are not smashing the like button, maybe you feel similarly about me. Basically what it's saying is that the market goes up when? The market goes up when you have a normal rate cut cycle. So when you get slow and steady rate cuts, that's what you want. You want slow rate cuts. You know what happens when you get fast rate cuts? Bad stuff happens. Stock market falls. When you get slow rate cuts, which is the green line here, I'm going to juggle some colors. In the 2 years after the first rate cut, we go up by how much? About 50%. So the best thing for the Fed to say and do is say, we're going to cut slowly because the economy is wonderful. The US economy is strong. We love the US consumer, and therefore we're going to go slow and gradual. And what did the Fed just say? Incoming data generally remained consistent with inflation returning sustainably to 2%. I mean, you could have used a lot less words, right? Incoming wasn't required, generally wasn't required, remained wasn't required, return wasn't sustainably wasn't. Basically, data consistent with inflation of 2%. That's what they're trying to say. They like to use a lot of words. They sit in wood-paneled rooms. Who would do such a thing? So what does it therefore say? That the market is very, very likely to keep going up. And you know what happens after the market goes up like 25% like this year? It tends to go up massively the following year. Why? Well, good things follow good things. We have a good economy, we have a strong economy, we have falling interest rates gradually, no one's freaking panicking. And then here is the data that Goldman Sachs didn't want you to know. And it isn't like they don't have the data. I mean, they pay like millions of dollars of data, and yeah, I leave it up to you to speculate why they're not telling you this. What is this telling you? This is telling you that tech earnings are on an absolute tear, and they are above the average growth trajectory. You know what that means? We're going to get more profits next year. You know what that means? Stocks get cheaper next year. And what does that therefore mean? It means we need to pick the stocks that have these beautiful earnings coming up and they're growing a lot and we're going to make a lot of money. If you want to learn how to do that, what do? You learn how to pick those breakouts before they actually happen. How do you do that? You learn how to read stock charts. And it's really, really quite simple. It's literally 4 things you need to learn. 4 things. Any beginner can learn this. Anybody can learn this. It's not rocket science. If the Muppets on Wall Street can do it, you can do it, because they're not the brightest tools, except when they're trying to mislead you. So to build real wealth, you need to learn to invest in stocks, which is presumably why you're here, which I love you for. And look at this. The return of what? The top 7, right? The Mag 7 over the last 2 years is 148%. Is your portfolio up 148%? Mine's up more than that. Not bragging, just stating a fact. Now, the remaining companies, the other ones, the non-Mag 7, they went up 35%. Not terrible. In fact, if you went to a financial advisor, he'd tell you that's a marvelous result and you're never going to see that again in your lifetime. Well, it's a bollocks result because you picked the wrong stocks or you bought the index, which I know they tell you is a way to get rich. It's better than not buying any stocks. I grant you that, but it's horrifically worse than buying the right stocks. Morgie from the UK is asking if this is live. I hope that answers your question. So you got to learn how to pick stocks, and seriously watch the masterclass. There's a link down below. Felixprehn.org/get free. After this video, sit down for half an hour and watch it, and you will walk away with a completely different understanding of how to spot those breakouts. But to come back to valuations, which is really what Goldman Sachs is saying, out of control and everything is going to collapse and that sort of nonsense. Well, the Mag 7 have this blue line here. What is it? It's not the stock chart. Nope. This is earnings per share. So profit per share. And it's gone up tremendously. And therefore, the valuations are not crazy. And this is the past. And it's about to get much, 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 much better. Let me show you this. PE is the worst thing you can look at. This PE thing is complete nonsense, completely useless. If you must look at those kind of metrics, because, I don't know, you feel like it, there is a better one. It is called PEG, and it takes into account the growth of profits in the next year. And that's the only thing the market cares about. Nobody cares what Bill Gates did on a certain island, what Microsoft did, mine just wandered there, what Microsoft did in the last 12 months, because everybody knows it. What we care about is what Microsoft's going to do in the next year. That's the basis on which Microsoft is valued. And if you want to factor that in, you've got to look for PEG, as in growth, right? And if you know the growth, then you know what's going to happen. So let me show you this little chart here. And again, the Muppet who made this had 2 colors. He had blue and blue. So I'm going to try and make sense of this. In light blue is basically MSCI. It's just the global stock market, everything, right? I had a chat with a friend, actually. He wanted to put all his money in on it. I walked him away from the ledge very gently. I don't know why you want to own everything, because everything is rubbish. It's only the top 1% or the top 5% that are good, like with anything. And the dark line is also MSCI, so global, but tech. And this is the valuation. And guess what? tech is valued the same way as the rest of the stock market if you take into account the growth and profits in the next year. So yes, tech is actually cheap, right? Kilgore says growth is a projection. It's true, but the market is based on projections. Typically, we beat projections historically. Why? Because companies tell you a growth that they're going to hit, and then they try to over-deliver. That's basically the way it works, right? The PCE data is delayed today, Christy. I also was staring at that at 8:30, and then it didn't come, and then it's now at 10 o'clock, right? What's going on over there? Maybe they didn't massage the numbers quite enough. Now, there are some stocks in tech that are not worth owning. This is one of them. This is Rivian Automotive. They got given $6.5 billion by Biden the insane, and it's going to pay for a plant in Georgia that nobody wants, nobody needs, because they're not selling any cars. The last time this glorious government of idiots handed out that kind of money, which was when? In March this year, they gave about $8 billion, or at least promised $8 billion to Intel. And what happened to the stock price? Well, it dropped 50%. So don't buy stuff the government gets involved in, because that's usually a sure sign that it's about to implode. Emil says, why not just hold? Well, you'd be holding Intel, you'd be down 50%. You want to hold that? Paper, it looks like a good business, right? But you could have gotten out. Okay, I would have gotten out here. That's where I would have gotten out. If I'd been really asleep at the wheel, then I would have gotten out here, right? So I would be down, what, minus 20%, worst case scenario. You're down 50%. And you might be down 50% for a year or two or three. Well, I would take that money and I'd put it into a trade that's going to make me some real money. So opportunity cost is the problem with buy and hold. Now, if you're not invested, buying and holding and owning an index fund is better than doing nothing. Far, far better. You're still going to get to a decent place. You're just not going to get to the, where's my island, where is my yacht, and nobody in my family ever has to work again kind of a place, which is, I think the goal for most of us, right? I do not want my children ever to have to do anything ever in their life that they don't want to, because stupid that the generations before me didn't figure this out. I thankfully had the fortune of figuring it out, and my mission and my ambition is to share it with as many people as humanly possible, which is precisely why we're here. Plus, it's a heck of a lot of fun. Biden the insane. Yeah, he probably doesn't realize he's insane though, right? Does he remember his name? I don't know. Poor chap. He needs a rocking chair. I think that's what he needs. So seriously, learn how to spot these breakouts before they happen. That's the first thing. Second step you then need to learn is risk management. But this gets you halfway there. So half an hour of your life and you will have knowledge you didn't have before. felixprehn.org/get free. Watch it down below. Now let's look at what matters, because I promised you that, instead of the nonsense and the noise that Wall Street's trying to feed you. It's all FUD. I think the market's going to do tremendously well. The S&P is on an absolute tear. The S&P overall is rallying absolutely beautifully, and you could sort of draw a rough trend line here and everything looks fantastic. Now there's one line here on this chart that you might question and you might say, what the heck is going on here? It is that in red line there, that is the French resistance, which sits at 6,100, and if you hit that, what happens? Market makers sell. But that's 80 points above where we are right now. So there's every reason to have unadulterated, beautiful growth and rally until 6,100. On the NASDAQ, kind of a similar setup. I've put that trend line in here already. We're nicely above it. And the resistance here comes in at 520. How do I know that? Well, there's a little piece of software called Trade Vision, which, there's the link, which we built to give you access to that data, because that's what Wall Street looks at. And they look at better data than you and me, right? And it also has really useful things like here, the trend indicator, for example, an exit there on General Motors because it's broken through the trend, which, by the way, if you'd held General Motors since the beginning of 2022, you'd be down 10%. If you traded it the way we indicated, you'd be up at least 42%, which would be a lot better, I would imagine. So A1 thinks you're going to make money on Intel after 50%. Like, you might be right, but I wouldn't try it. And I'll tell you why. Let me show you a chart, for example, another company that's fundamentally sound, PayPal. And I tell you why when people tell you buy the dip, it's stupid. So PayPal was trading at $320 up here, right? It dropped 50% down to 160. So our friend A1 would have bought it and would have been brilliant. It's a steal, it's a bargain. Well, it then dropped to $70. So are you still happy, my friend? You know what happens when things fall? They tend to fall more. Why? It's psychology. So there's no reason ever to buy a falling knife. Please, 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 my friend, watch the masterclass, because it would have taught you not to touch this with a human, with a very long barge pole. You should have exited here, you should have sold there, and then you should have done absolutely bugger all. But unfortunately, because there is this idiotic rumor of buy and hold forever out there, which is, who does it benefit? The funds, the mutual funds, the banks who hold your money. Benefits them because they collect fees from you every year. So what would you have done? Well, you probably would have sold somewhere here. You would have just given up hope, right? Because you held on to this thing for 2 years. You lost 70% of your money, not knowing that we're about to get a rally kicking off here, a breakout. And that's what we did. So we bought here, and at the moment I'm up, I don't know, 33% on PayPal. That's the third PayPal trade this year. So we probably made about 60% on PayPal this year. So you need to understand these basics, and nobody taught them to you at school or at college, or if you have an MBA or a fancy job, or no one teaches you this stuff. Why? Because nobody actually knows this stuff outside of the Wall Street traders. So I was very lucky. I was in the right place at the right time, sat on a trading floor, and I learned a lot of stuff. And it appeared to me that it's incredibly unfair that nobody knows this out there. And in case you're wondering, well, why share it then? Well, it doesn't harm me. And it's incredibly satisfying to get messages every day from people who are making a lot of money. So everybody deserves to have freedom, I think. I at least think so. So don't be a bag holder. That's really, really what I'm saying to you here. French resistance line. We take the piss out of the French. Now we got 2,000 viewers, which is brilliant. We got 384 likes, which is probably less votes than Kamala got, right? So Lisa, you've quit your job. Lisa, I could not be happier for you, seriously. And you should take all the credit because you've put in the work, you've studied, you've practiced, and you are applying risk management every day, right? Never, ever get into an investment or a trade unless you've got your stops set up. That's really the most important thing, but makes me very happy to see that, Lisa. Thank you very much for sharing that. Now, all right, let's look at a couple of our favorite stocks here. We looked at PayPal just, which is trading decently, a decent jump up at $87 here. But let's look at some of the big boys out there. Let's look at Tesla and Nvidia and PayPal and Palantir and SoFi and so on, and everybody else you want to check out here. What are we seeing with Tesla? We're seeing a pattern, and the market is nothing but a pattern. That should be a song. And what do you see when you look at a chart like this? Well, the little blue box I drew in here, if I can have a pen, kingdom for a pen. The little blue box I put in here, and this is all in Trade Vision that I'm using as a software. That was the breakout, right? That was our buy signal, and then that would have made us a lot of money. You could have exited here. There was another buy signal actually here, and you'd still be making a heck of a lot of money. You'd be up at least 70% or something like that, and we're up a heck of a lot more on, I think we're up 100. What are we up? Maybe even 180% or something on Tesla, or something extraordinary. And then what happens? Well, what happens after a rally? You get a rally. You get, I call it an exhaustion pattern. You go sideways for a bit. And that's when you decide whether you're going to go down again or whether you're going to go up again. And do you know whether it's going to go up or down? So just assume you know nothing about the stock. You never heard about Elon or never seen a Tesla in your life because you've just come out of a cave or something, out of a coma. You wouldn't know. And in fact, nobody knows. Nobody knows for a fact. But mentally, I think they're going to do tremendously well. So what do you then do? Well, you just set a stop. It's very simple, actually. You sort of look at the lower end of the trading range here, and you basically draw a line and you say, well, if I drop below that, I'm out. No emotions. You're not married to the stock. You have no religious affiliation to the stock. You are in the stock to make money. And I don't care what stock I make money with. But it's a healthy consolidation. There's nothing wrong with it. We're above the support line here at 337. And if you want to understand how to spot those breakouts, by the way, please watch the masterclass, because you will actually be smarter by the end of it. Better informed, better tools, which is really what this is all about. I thank you also for the 200 extra likes. We now have about 25% votes, which, you know, better than nothing, I suppose. 75% of people think this is a waste of time. Support line sits here at 337, so we're about $4 above that. And if you think that the support line doesn't matter, well, the chart seems to tell a different story, right? You see that here? You see how that matters every single day? You can also look that up better even if you go into, say, a 5-minute chart. And this is in Trade Vision, links down here below. And zoom out a little bit, and then you can actually see what happens during the day. So what do you see? You see that when we broke through it here, you see here we dip below it. What happens? Volume spikes. Why does the volume spike? Because the market makers have to buy Tesla at that point. So they do, and they buy it, and what happens? We go above the support line again. Now, you can't break through these with enough, selling, but it's definitely a very, very useful piece of information to have. Let's have a look at NVDA and see what's going on over there. That's what my wife says about me. Better than nothing. That's very funny, my friend. That's very funny. NVDA, right. So what do you see here? Okay, so we're still above the support line at 134. We're at 135. Not amazing, but we're still above it. Now, we're down a little bit from yesterday, which isn't brilliant. That blue line I drew in here, it connects that low, that low, that low, and we're below it. And that would call for, in my humble opinion, at least for partial risk off or partial profit taking, because you're dropping, right? Now, you could say, all right, I'm going to wait for the 134, maybe even this low here at 132, but you're going to want to have a stop in there somewhere, because stuff that goes up also goes down sometimes. Now, fundamentally, I love NVIDIA. I think it's an amazing company, but I'm not interested in the ups and the downs. I'm interested in, that was a buy signal. That was a buy signal. Was that one here too? I can't remember. Is it? Probably. That was probably one, right? And then each time, what happens? We rally up, go sideways, we go down. So why not exit here? Why would you exit there? Because you don't know it's going to keep going up. Same story here, right? So here, should have exited, right? And that would have gotten you out of the sleepless nights and out of keeping secrets from your wife because you're down on the stock 40%. It's just not necessary. Same story here. This is a warning sign to take some risk off the table. At least begin to start learning how to do that. Let's have a look at PLTR, good old Palantir. Damn, I miss Luxembourg. I think that's the first time anyone's ever said that. I've never been to Luxembourg, so I can't actually possibly comment. I have a friend who moved there, actually. He told me he was lovely, but then I don't know. He was an ESG banker, so, can't really take him very seriously. Now, Palantir, I drew some lines in here today, actually for a friend, and then I thought I'd share it as well. I put it on X earlier today. And again, I want to show you just how to look at this. So there's 3 bits of information here. There's a resistance here at 65, right? We've smashed through that. Brilliant, right? So you're very happy. Absolute more wonderful. And you still want to have some risk management, even if stuff goes up, right? So at the very least, go to the recent lows, multiple lows. Here we have 1, 2, 3, 4. And then slightly below that, I would set a stop. Perhaps something like that, right? You could be a little bit more aggressive and have it up here too, but you always want to have that. You always want to have some protection because you're not staring at a screen all day long, right? But Palantir is looking very good. I mean, looking very, very healthy. Very, very healthy indeed. And I just think I posted a little thing today on Twitter just about, I think every single piece of US military equipment is going to be autonomous. Ships, planes, submarines, vehicles, tanks, artillery, it's all going to be autonomous. There won't be people in it. There won't be people near it. Why not? Because it's dangerous and stupid to be in a war zone as a human being. So they're going to do that. And then what does that mean? It means Palantir is going to run it. It's going to be the operating system. And you might think that'll never happen. The US Navy today is testing an autonomous ship with autonomous planes on it. Right? And the plane's taking off from that autonomous ship. So they're doing that, and they're doing that somewhere in the Gulf, I think. So that's going to be the future of warfare, and it's going to be powered by Palantir. And whether you like that ethically or not, different story, but it's going to make them a lot of money. Colin, appreciate that. Thank you very much. So fine, we can look at that too, for sure. And then we can do a quick recap as well for anybody who's just joined. Look at that. That was my trend line, right? Where was the breakout? Where was the classic breakout? Let me have a look. Where was it? Where was it? It was, I guess this was probably it here. 14th of October, we're trading at 9 and a bit. I think we got in at 9.25 or something like that. We're up about, I used options, so we're up something like 130% or something on SoFi, which is just extraordinary. And you see how we're actually above that trend line. You see how the trend line's useful. It gives you kind of an indicator how we're accelerating. You could actually draw a new trend line in there and sort of connect that sort of zone, right? And then you're seeing that we're slowing down just a little bit here. Nothing to worry about. But what we're doing is we're hitting our head on the $16 resistance line here. You see that there? We didn't make it through that yesterday. So you could again look at a 5-minute chart and you can actually see the day and you can see exactly when market makers were selling. So let's move it back a little bit here. There we go. Let me see, this was yesterday. So you see the volume bars down here? That was the day. After that, it's post-market and pre-market. Nobody really cares. So yesterday did we hit it? No, it was actually the day before that we hit it. Here we go. We hit it up here. Market opens. See how the stock falls, how it drops, and you see the massive volume as it does that. And you see that as we go lower, the volume declines. Why? Because the market makers stop selling. So if you understand that, you understand more than 99% of people out there. Oh, you don't see the chart. Okay, sorry about that. I just wanted to get more engagement on the stream. No, I'm kidding. That was not intentional, but I'll show you again. So you go on a minute chart up here in Trade Vision, and you can get a free weeks trial to Trade Vision if you wish. It's a software that we build. I never plug anybody else's stuff because I don't know if it's any good. And at the beginning of that day here, the 25th, we were above the resistance line, right? At 16.30. Boom, the day opens, we drop like a rock all the way down to 15.60. See the massive volume selling? That's institution selling. You can see that in the volume bars. You and me, we don't sell 1.7 million shares in 5 minutes, right? This is institutions doing it. And then as we've dropped below and far away from the resistance line, the selling stops, volume goes flat. Not a lot happens for the rest of the day. Market makers have done their job, right? The buggers. So super useful information to have. Gains are so juicy, we're not allowed to look. Set a stop loss, my friend, and then you don't need to look. And have a look at it once a week, and you can hopefully keep moving it up and up and up and up, because that way we lock in those profits, right? That's the important thing to do, is be disciplined, have rules. The trend line in Felix's forehead, yeah, there is a bit of a trend line here, isn't there? I think there are a couple. All right, MicroStrategy. Let's look at that. Now there is a leveraged version of this, which some people got really burnt on, because this thing went up and it went down. So be careful with leverage. So yeah, we hit 500, and what was that 500? Resistance. Yes, the French were there, and they said sell it all, and they did. That accent was terrible, wasn't it? And today we're recovering a bit here. We're jumping up from yesterday's low at 350, 30 points up. It's just like 10% up pre-market. This is a stock for people with a very strong stomach lining, or, yeah, Very strong stomach lining. I think that would be the way to put it. So be careful with that. Because not everybody's necessarily made for it, and you can make money with stuff that's a lot more boring. You don't have to be in GME or AMC or MicroStrategy or whatever. It's a very interesting business model that we could theorize on, but yeah, is it still in an uptrend? Yeah, arguably, but yesterday was pretty ugly. Yesterday was definitely a break of the upwards trend line here. So be a bit careful on that one. That's what I would say. Ding, ding, ding is opening up. Oh dear, let's have a look. Shall we have a look, or shall we not bother? Well, let's have a look at QQQ. And we can also have a quick glance at what Bloomberg is putting out there. US GDP grows at solid 2.8% pace, helped by consumer spending. You see, it's all good news around here, which is exactly what I said it would be. And the inflation-battered consumers are going to extreme lengths to nab holiday deals. Is this the same person? Is this someone who's a schizophrenic and he forgot to take his meds today? Right? Bonkers. People are obviously talking about Trump's pick for Commerce Department, which is trade and tariffs. A bit of a China hawk, tariff hawk there putting in. So he's basically doing exactly what he said he was going to do. People seem surprised by that. I don't really know why. Musk says we should delete the Consumer Finance Agency. For sure. They should delete pretty much every agency there is out there. You know, the whole, it always makes me laugh. Non-governmental agencies. You know what that actually means? An NGO, it's a non-governmental organization, right? Do you know who it's paid for? It's paid for by the government. So it is actually a governmental organization that just doesn't appear on the books. So why do we need them? There are thousands of these. Thousands and thousands of these. Just get rid of the lot. Just scrap them all. You'll notice if you need one of them. I doubt that you will. I don't think anybody will notice. So yeah, complete nonsense. So I applaud the efforts there to get rid of as much government as humanly possible. Let me do a very quick recap for you, anybody who's just joined. Our goals for today were simple. I want to basically do for you what would happen if you were sitting in an investment bank where we would have a morning meeting and somebody smarter and wiser would give us the breakdown of what's about to happen that day. Somebody who got up an hour earlier than us as well, and make you the best informed investor out there, right? I wanted to explain to you the Wall Street FUD today, what not to worry about, the nonsense they're telling you. I want to give you the real data on why stocks are actually cheap and help you understand what matters for your portfolio. And then we went through some of our favorite stocks and hopefully I've answered some of your question. All is probably a little bit of an exaggeration because we've got 2,200 people live here, which is very, very cool. I love that you're willing to learn. So this is the FUD that Goldman Sachs put out today. So they're basically saying the stock market this year is up here and it's at the very, very top of all the years, 100 years of the stock market. And I look at that and go, that's brilliant. Everybody made a lot of money, right? It's been a fantastic year. Doubled our portfolio just in the last 2 months. And they're saying, oh no, it's gone up so much, therefore what goes up must come down, which is just bollocks, utter bollocks. And then they come up with this chart here, which I know is incredibly confusing. I apologize for it. But basically they're saying there is a PE ratio, which is up here right now, and it's really, really high. They're saying it's higher than 2000. But they know, and I know, and you're about to know that PE is nonsense. Nothing useful ever comes out of looking at a PE ratio. Why? The stock market cares about next year. It cares about growth. So if you replace the PE with, let's scroll down, where was it? With, we're not going to run through absolutely everything here, just a bit of a summary, with PEG, which is basically PE, but including growth for next year. What happens then? Well, it actually says to you that tech stocks are valued the same as the rest of the stock market and that our valuations are average. Right? So, 2 sets of data. They showed you half the data. I showed you all the data. Right? Hopefully that'll help. Of course, you have to come to your own conclusions. I then made fun of Biden for giving another $6.5 billion to Rivian, who should be bankrupt. And last time he did that, Intel, he gave $8 billion. Well, he promised $8 billion in March. Intel's dropped 50%. So if the government gives you billions, generally as an investor, run, right? Because it's just a bad idea. And then I wanted to encourage you to learn how to pick stocks and learn how to actually find the breakouts before they happen, because it's really, really quite easy. Really very easy. There's only 4 things you need to learn. And you can do that in half an hour. Literally in 30 minutes, you can learn how to pick great stocks. And how do you do it? Watch the free masterclass. I record it for you. That way I don't have to repeat myself every day. And that way you can watch it whenever it suits you, whatever time zone you might be in. It's completely free of charge. Go to felixprehn.org/get-free and you'll actually learn how to pick those breakouts. Bloomberg is nuts. Yes, they really have lost their marbles over there. I don't know what's going on there. Right, so there we are. I showed you that. I walked you through a couple of support lines. We're not going to run through everything again because that would be tedious, and we've already done it. In terms of stuff moving, have a quick look at a heat map. See what's actually moving here as the market's now open. Nvidia is still dipping a little bit. Just check, it's a bit of a risk-off day. Finance is doing very well. I mean, with GDP growth just coming in the way it is, we're going to get rate cuts, but a bit more slowly. US consumer is strong. Everything is freaking wonderful, if you ask me. Now, why the sell-off here? It doesn't make a great deal of sense. Now, bear in mind, most people are already on holiday. They're in Aspen or Whistler or in the Caribbean or something. I mean, by most people, I mean Wall Street. And therefore, there's very little trading volume today, so it's easier to move stocks more. So I wouldn't pay huge amount of attention here. Did you get your new kittens yet? No, I'm still being put through the ringer, quite literally. They are very protective of their kittens, which I appreciate, but hopefully we're going to get our paws on them shortly. Otherwise, I'm going to have to eventually talk to a different charity. So there we are. And yeah, so hopefully you got some value out of this today, which is always my intention. But if you want to get some real value, please click on the link in the description down below, felixprehn.org/get-free, and help yourself to actually get free. Because how do you get free? By making more money. Simple as that, right? Money is the path to freedom. It's not the path to everything, but it makes everything a heck of a lot easier. I used to have a 9-to-5 job. I didn't have control over my time. I was always exhausted and tired. And now I wake up and I think, what do I do this morning? What do I do today? What did I do this morning? I went and played tennis with a friend. And it's a much nicer way to start the day. So come and join me by watching the masterclass at felixprehn.org/get-free. I appreciate you for watching and for tuning in, especially the 800 of you who smashed the like button. Thank you for that. If you get some value out of this video, share it with a friend or a golden retriever.